in broadly in the bank, the global financial market unit takes care of the client's scope, where we look after investors. Number one, we look after importers. We look after other banks, tier 1, tier 2, tier 3 banks. We have conversations with government, and then we also talk to some offshore fund managers and offshore investors alike. And product-wise, broadly, our product borders around FX. We have FX conversation, we have investment conversation, and we have some risk management in terms of interest rate risk and then FX risk conversations with clients broadly.
I see. So the basic, role of a bank is financial intermediation. So when you take the deposit of customers, your department or what you do is look for those special purpose vehicles, both local and offshore. Invest the monies and then see the returns that you can give to your clients. Is that it? I really want to understand what you do.
Yeah, you could say that, okay, but not entirely that. Yes.
What more is there to it?
So, I mean, we have a bank is regulated, right? Okay. We have what we can and we cannot do, right? So depositors' money are protected in every institution, including ourselves. And what we do there is to actually serve client needs, right? So typically you have maybe an importer who is looking for FX, or you have a fund manager who is looking to invest cash, or you have an individual who wants to buy a treasury bill. Those are the kind of conversations that we have. An institution who wants to come to the capital market to lift money. Those are the conversations that we have.
Interesting. Yeah. Which means that investment is one of the things you do, which is why you are here.
100%.
Okay. So investment made simple. You are looking at treasury bills, you are looking at stocks, you are looking at bonds. But before we go into those areas more specifically, I really want you to lay the foundation for us. Savings, investment. I know they are not the same.
Okay.
Break it down for me.
Thank you very much. So basically, savings, typically, culturally, when we're growing up, some parents, including mine, taught us to put money away in a box, right, which is the savings. And typically, you will have banks allowing you, like ourselves, to have a savings account. So putting money away for future use is savings. Investment, on the other hand, is making sure that the money that you've put away is being put to work to generate some form of return so that you'll be able to cover a financial goal, a future financial goal. So those are the two distinctions between savings.
One has returns, the other doesn't have.
Not necessarily. I mean, some savings account could return you something, but I can tell you that majority of them will not give you something that will cover inflation, which is obviously one of the key reasons why people invest.
Okay, I like the distinction you've brought to the conversation. So I want us to get practical right from the outset. For somebody who has not invested before or who is new to investment, what would you say is the best investment option for that particular person, making it the safest starting point?
Yeah. So for a start, I typically advise that you start with maybe treasury bill and then what we call the money market funds, right? You have to start where the risk is the lowest and perhaps, the lessons are cheaper, right? So for treasury bill is typically backed by government. In Ghana, most treasury bill is backed, even though we have some corporates that have issued short-term durations, but treasury bill is backed and bonds are backed by government. And your return is known even from the onset.
Okay.
It's liquid. If I say it's liquid, any other bank can buy your treasury bill if you are looking for the money back. And then the other option, which is the money market fund, is also run by the investment houses, right? Where they pool money together and then invest it in various assets. The advantage there too is that it's professionally managed. So you're able to the work that you ordinarily have to go to school to do, a professional will do it for you for a very small fee.
I see.
Yeah.
So do I take it as you first have to save before you go in for investment? Or when I get money, I can just go in for investment? Is there a threshold that maybe I should be saving to this particular level before I go and invest? Or any amount of money that I have, investment should be the first port of call?
Yeah, I mean, it could be your own strategy, right? it's best to build on savings, right?
Okay.
But there are investment houses that allow you to invest as little as 50 cedi. So you can do both. Both are not a wrong way to or wrong path to create wealth, right? So you can either put money down and then invest it within a short time period, or you can start straight away by investing in things like mutual fund.
Okay. You've explained Treasury bill. I know we have the 91-day bill, the 182, and then the 364-day bill. So 3 months, 6 months, and then, a year. And each of these has its own, interest rate, which is why you said that you can know the return right from the beginning. Yes. So let's talk about mutual funds specifically now, and then bring in the conversation regarding bonds and stocks.
Mutual funds, I like to look at it in terms of maybe returns and then duration. Mutual funds, like I alluded to earlier, they are basically run in the investment houses, right? The banks don't run mutual funds. And these are regulated entities. And they are backed by strong investment management. And they are able to also generate good returns because these are people who have actually, gone to school and they learn the craft of investing money. Now, they pool money together, like I said earlier, and they're able to come to institutions like ABSA and buy financial instruments which generate return. They buy things like bonds, they buy things like T-bills. So the same instruments that you could buy yourself, a mutual fund, can do it more professionally, if I should put it that way, because the nature of a bond investment is such that, an example, it pays interest semi-annual, right? So if you don't have the discipline to reinvest those interests that are paid every 6 months, you lose the real value of doing that investment. But if you give your money to a mutual fund, they have that fiduciary duty to make sure that your money is growing, and they will be disciplined enough to sort of invest the return that comes from a bond. On equities and stocks, those are basically investing in ownership of companies, right? So the risk return are a bit more higher, right? You expose yourself to a higher risk, and the same way your returns can also be higher. Typically, the advice is to take the listed companies, right? You find them on the Ghana Stock Exchange. These days, we've seen a very strong interest there, and it's quite a good thing for the market.
But my question is, do banks help customers, invest in stocks? Because you first have to get your CSD account, right, if you want to buy
Correct.
stocks. I know for treasury bills and then mutual funds and, even fixed deposits, the banks can help you.
Yes.
But for stocks, which you say a lot of interest is there now, how do the banks come in? Do they have a role to play?
Thanks. So currently, I don't think any bank, can sell you a stock, because before you do that as an institution, you need what we call the licensed dealing member, and some banks have other units like a brokerage house, right, that can do that for you. So you can find the information is on the SEC website, right? List of authorized brokers. You can find them and then visit them, talk to them. They will set you up on the CSD, and then you'll be able to purchase stocks from the stock exchange.
So what are the common misconceptions people have when it comes to savings and investments?
So this is an interesting part of our investment journey. So what I've had or what I've heard typically is investment is for rich people.
Why isn't it?
I mean, so the idea of investment or investing is to fulfill a financial need, right? If your salary is 2,000 cedi and you have a future need and you can put 5 cedi down every day and invest it later, that's what you have. And I believe that that's what you should do. So the entry point for investment is unlimited. It doesn't have a cap, which is only meant for rich people. So I mostly advise people that the key thing is to start early. The other misconception that I hear a lot is the loss of trust. We've gone through, as a country, we've gone through a period where people have lost money in diverse ways. They are all regulated entity. You can check with the regulator if you're not too sure. So yeah, those misconceptions exist, but investment is also, a way to go rather than leaving your money down.
It's interesting how a lot of investment analysts or even financial sector players say that T-bills are safer. It makes it sound as if the others are not safe. Maybe there's an opportunity for you to really demystify that myth.
Yeah, yeah. I mean, I also hear that, but also because of where we've been before as a country. But I think T-bills, due to their nature, right, in terms of duration risk, they are easily managed, right? And in my lifetime, I've not heard that there's a default on a treasury bill, a government treasury bill. It's quite safer than.
You are still watching and listening to the honor series of the Citi Business Festival 2026. We are talking about investments made simple. My guest is the senior dealer global financial market at ABSA Bank. He's walked us through the fundamentals of investment. When we return from this breather, I'll be looking at how regulation and diversification matter in the scheme of things. Stay with us.
Still, Misaka, and Nemu was a summer brabo, and it can afford swab
Misaka pensions, Carol.
Misaka order Sika.
Misaka
insurance.
Misaka loan.
Momo Fogusuri ye echumaden, diaboye nyina ye sika ho ban. Se MTN ana momo jumaye ni befrewa or the 0244 300,000 ene befrew. Na numpo orimbitsaw one time password ana se upin code enti wonso ye wa femu die na ma weni na ho na wonsa enka wo momo.
Looking for power, performance, or pure driving comfort? Looking for strength for your business or style for your lifestyle? Welcome to Zondertech Ghana Ltd, your one-stop automobile shop. From heavy-duty trucks built with global powerhouse Sinotrack to premium SUVs and pickups from Great Wall Motors and Cherry. From light-duty commercial trucks to world-class construction equipment from Shantui and Sunny Group, Zondertech delivers top-most quality brands with affordable luxury. Zondertech gives you power, prestige, and performance all in one place. Strong, reliable, affordable. Zondertech Ghana Ltd. Drive the future. Call Zondertech on 050-177-2222 or 050-177-3333.
You are welcome back. I'm Neil Atelati here with the honor series of the Citi Business Festival, talking to Samuel Freitas, Senior Dealer Global Financial Markets at ABSA Bank, leaving us with a clear understanding of how to start investing, not only safely but also deliberately. Well, Samuel, before we went on that break, you had given us some of the, rudiments when it comes to investment. I pick regulation, I also pick inflation, and also how and why people should look out for short-term and long-term investment. Let's begin and continue with this. Inflation, which is why I say that people should not only save but also invest, because inflation can eat up your money.
Correct.
If you don't invest. How does that happen?
Right. So inflation is typically explained basically as the rate at which prices of goods and services go up. So let's say you save money, right, and you don't invest it, you're likely going to end up in the future having less of value for that money that you've saved. So for example, a bag of rice that was 200 Citi today, maybe you're saving to buy that rice in future. If you're not investing, inflation, which is currently in Ghana around 3.7, should eat part of the value of that money that you're going to use to buy the rice. So inflation becomes sort of, I see it as a bedrock of which one of the bedrocks of which you should pick your investment choices, because it becomes the foundation on top of which you want to grow your money and always be above it, so that at the end of the day you'll be able to purchase your desired goods and services.
More or less like protecting your
Exactly.
purchasing power.
Exactly.
I see. Let's talk about regulation now. I know banks are regulated by the Bank of Ghana, investment by the investment by the Securities and Exchange Commission. Now, people would typically want to give their money to a custodian they believe they can trust.
Right.
A custodian they believe they can trust. Now, if I am going to give my money to any financial institution, what should I be looking out for? How do I tell or even determine that this is a safe investment, place?
Good. So this is a very important question because of obviously where we've been, through as a country. And I can tell you that it's very easy to do that, right? The simple way to start is to visit the SEC website or each regulator of the entity that you're putting your money in. The SEC is a regulator for most investment houses, right? All investment houses. So you could find a list of, good standing institutions where you can put your money to. That's the first thing. We also think that you should also look out for, scams and things like that, because sometimes an investment opportunity come to you and it's like it's too good to be true, right? Somebody can come and promise you 100% over a month or 50% over a month. Those are the things, those are the red flags that you should also find out what exactly is going into achieving that return that they are giving you. Some of these things come through WhatsApp these days, so, and they put some kind of pressure on you for you to make the decision. I can tell you that no regulated investment house will give you a time-bound investment where if you don't come, you miss out. So some of these things are red flags that I believe listeners should pay attention to.
So first has to do with the tenor. If the returns are coming in shorter than expected, you should look out for it. If the returns are also higher than what the regulators or what the market is determining, you should be on the lookout.
Good.
And if you are under undue influence, they are pressurizing you, it should signal
100%.
Something to you.
100%.
Okay, so 3 quick points over there. Now, you had earlier mentioned the difference between T-bills, bonds, stocks, mutual funds. And I believe that all of these will have, maturities or durations, which is short-term, long-term, right? So if I want to invest, at what point do I say that, well, I need to go in for a short-term investment or a long-term investment, which is the ideal situation for what I'm investing or saving against?
Yeah. So, I mean, like I said earlier, investment is mostly driven by your financial goal. Everything else flow from there. So if you're starting an investment journey, you have to define that by what you want to achieve in the future. So if you're looking to maybe pay your infant child's university fees, Treasury bill up to maybe the bonds level are easier way. They are backed by government and guaranteed by liquidity is there. You can always get your money out. If your outlook or your need is far out in the future and you're young, you can risk out a portion of your money in equities. One other thing that you should also consider is your risk tolerance level, right? You have to think about it. If you're somebody who cannot sleep with the fluctuation of price of your investment, for example, if you buy stock, for example, and each day you check the price is going down and up, and you don't have the stomach for it,
you'll be alarmed.
then it's not your thing, right? You move on to something easier that you can do. The other thing too is the flow of your income, right?
Your cash flows.
Your cash flow, your flow of your income. For someone who is, have irregular cash flow, for example, you buy or you sell phones, you could have a very good month or you could have, a very poor month. You should stick to short-term investment because perhaps maybe you have dependencies, right? And you may need money. And if you do that, if you go buy maybe a long-term bond, you are likely to break that and then lose the value that you would have ordinarily have. For those of us that do 9 to 5, that we have a bit of surety in income, you can, layer and put aside a good amount in long and then short term. So those are the dynamics that
I see. So realistically, if you have school fees to pay in say 3 months, that is not when you go and invest in stocks.
Stocks, correct.
Okay, I see. Interesting. I'm talking to Samuel Freitas. He is the senior dealer global financial markets at ABSA Bank Ghana Ltd, talking to us here on the honor series of the Citi Business Festival 2026. We are wrapping up the conversation, but he's going to leave us with 2 key things where diversification comes in, as well as the role ABSA is playing in terms of investment and, savings. Which one do you want to take?
We can look at diversification. Now, diversification is simply a very strong risk management tool for investment, right? If you look at the structure of your investment, you can't always, the old adage of not putting all your eggs in one basket, it still holds for an investment strategy. So it's very good, or it's advisable, or it's valued to not put all your money in one basket. You could spread your money across several asset classes to be able to get a return, so that in an event that one asset is falling, or the value of one asset falls, the other picks up, and then you end up with a very nice portfolio that is strong and resistible to shocks, right? So diversification is very important in choosing the path of investing.
So diversification, that's the pathway, right?
Yes.
So is it that if I have, let's say, a lump sum and I want to invest, is there a general or golden rule to it? Do you say I put X amount in, say, treasury bills, Y amount in bonds, and then Z amount in stocks? You have done this job for a very long time. So maybe for somebody who is beginning the investment journey, as we wrap up the conversation, just walk us through really what the ideal and realistic, situation is. Because, one thing is that people invest 2 weeks, 1 month. They say, I have need for the money. I really want to go in for my money. So just tell us what the ideal and realistic situation looks like in this whole investment journey.
Yeah, I mean, people will tell you, will give you ratios, right?
Right.
But for me, I believe that your age in investing, timing is very important. You cannot be 60 years old and still be buying real estate and chasing tenants for your rent, right? So age is one of the key considerations. When you're 60, balancing or diversifying your portfolio means that perhaps you put more of your money in fixed-term, short-term investment, where the maturity is shorter, there's more liquidity there, you can easily get in and out, so that if you have need, you get it and be able to sort out your issues. And when you're younger, then you can take some more risk, right? For example, age like yourself, you can decide to take more risk on the stock market and then leave a little bit of it in there. So really, it depends on your lifestyle. You have to just let your lifestyle and your circumstance in terms of your age dynamics play in layering or doing the diversification of your portfolio.
Amazing. Now talk to me about what ABSA is doing. How do you guys come in this whole conversation of investment, savings, and building generational wealth, if you like?
Okay, so at ABSA, what we are looking at doing currently, or what we've been doing over the past week, we've been a very strong member of this financial market, right? We've played key role in various points, and we continue to be a market leader in this front. In terms of investing, for personal investing, we have an app, right? A banking app where you can buy treasury bills from. You can also walk to our branches and buy all these financial instruments that I talked about, except stocks. In terms of knowledge sharing, one of the things we're doing, which is why I'm here today, is to spread the word that, you know, treasury bill still matters, even though we've gone through, treasury bill and bonds still matters, even though we've gone through a DDEP process. We also have things that we do for the youth, called Ready to Work. We try to educate people or the youth on the essence of work and then investment as alike. So these are some of the things that, you know, we are doing as a bank.
Leave us with one word or one statement if we want to get our investments and savings right.
So the key thing that I would say is that stay patient, be consistent, and don't chase after high yields.
So patience, consistency, and then also don't be chasing high yields. The concluding remarks of Samuel Freitas, Senior Dealer, Global Financial Markets at ABSA Bank Ghana Ltd, concluding for us another educative and exciting episode of our honor series of the Citi Business Festival 2026, which is powered by 97.3 Citi FM and Channel 1 Television in partnership with ABSA Bank, sponsored by ABSA Bank again, MTN, Zonate Ghana Ltd, and Petra Trust. I'm Ni Lati Lati.